Let me go to Mike in Ohio. By the way, 866 300 9298, 866 300 9298. Hey, Mike.
How you doing? I bought a gold ETF, and it's down like 25%. So I was just wondering if you would recommend buying more to lower the cost average basis and then sell it when it gets in the green, or if you just leave that alone. I'll hang up and listen.
All right. Thank you, Mike. So there's a lot of people that bought that gold ETF and, are not doing real well right now. Listen, it really is. I would, let me just say this. Would I be buying it now? No, I wouldn't. But, I'm not a buyer of, I have a gold ETF on my website, had it on my buy list some time ago. I personally wouldn't buy it. If I'm going to own gold, I'm going to own the real thing. I'm going to have it physical. But nevertheless, it's got a long run to go. If you're down 29%, so gold's got to get to 29% before you break even. Gold's got to increase dramatically before you break even. Then there's the ETF is not going to track the spot gold price exactly. So I would say the spot gold price is going to have to go up 33 or 34% before you start to get to a break-even point. Now, could that happen? Yeah, if the dollar crashes today, that could happen. If the dollar, if it looks like we're going into a deep recession, depression, or inflation settles in, yes, that could happen. Is it ever going to come back up, and is that going to happen? Yes, it is. So if you want to wait on it, if you want to wait and hold it for the next 30 years, chances are between now and the next 30 years, you're going to do very well if you do that. But to say whether it's going to come up in the short term, I don't believe it is. Not at that pace. I don't think it's going to come up 30% in the short term. There's too many other factors in there. Even if we start seeing a correction in the market, I don't believe that we're going to see the kind of inflation and the devaluation in the dollar that's going to drive gold up. So, but again, I'm hoping, I don't know this, Mike, but I'm hoping you bought it for a long-term investment. If you bought it for a long-term investment, you ought to hold it for a long term. And if you do that, you'll probably get out whole at some point in time. So I'm going to, you bought it for a certain reason or under a certain condition. Don't know what that is. I mean, you bought it because you thought it was going to go up. And, we can buy on good news. We got to stop doing that. We can't buy on the news and then sell on the news. So we're buying on the good news. We're selling on the bad news. We're always going to get clobbered. And, so all the hype, there's so much hype around gold and silver, precious metals, that it's difficult to get a real handle on it. So if you're an average person and you are buying based on the hype that you're hearing, everybody is buying gold right now. And everybody bought gold when you bought it because of the hype that is going on around it. It's the wrong reason to buy anything, in my opinion. Precious metals have always been and always will be a speculative commodity. They're always going to be volatile. It is always going to be, they're either, maybe they will go up or maybe they won't. I mean, it's very speculative. It's very risky. It's very volatile. It would be a very aggressive play. If you are going to invest in very speculative kinds of things, then you would better have a very long time horizon in order to do that. If you don't, yet you still think it's going to go up in the short term because of all the hype, I would play it safe and not invest in it. Because even with all the hype, it has as good a chance of going down because, remember, it's a speculative investment. It has every, bit as much a chance to go down as it does to go up. So if you don't have long term, then we've got to be very careful that we don't go into those kinds of investments. So all I can tell you is use your best judgment. I mean, I wouldn't sell it right now because if I owned it, I would have had it for the long term. And would I be annoyed? Yeah, I'd be annoyed. I'm down 29%. Wouldn't love it. But at the same time, I wouldn't sell it. Would I add to it? If I had a very long time, I would definitely add to it. I would buy more shares and lower my average share price so that when it does come up, It's now not going to have to come up 30%. It's only going to have to, if I can double my position, it's only going to have to come up 15%. And it's a lot likely that it's going to come up 15% in the not too distant future than it's going to come up 30%. So it lowers your time, it shortens your time, it helps you get out of it ahead a little bit sooner. But I wouldn't even do that unless I have this long-term horizon. So if you have it, add to it. If you can double your position, that would be great if you have a long-term horizon on it. And if it goes down again considerably, if you can try to buy some again then, that would be a great move as well. And eventually you'll probably do pretty well on that.